Stocks selling off a bit into the close today. The S&P 500 and NASDAQ setting record highs earlier in the session before turning lower. And your next guest says there could be some more pain ahead for stocks in the fourth quarter. Let's bring in head of U.S. equity strategy at RBC Capital Markets, Lori Calvasina. Lori, great to see you back as well. Listen, this has been a record-breaking rebound rally on so many different metrics. Why are you more nervous heading into year's end?
Look, I find myself thinking about 2018, and I'm not saying we're going to have the same kind of drawdown that we had in the fourth quarter of 2018, but if you go back to that year, we had this big blow-off-the-top rally on tax reform hope and excitement in January. We got caught up in the low vol unwind. The trade war in the second quarter pulled us down. Then markets sprung back, and guess what? The small caps hit and surpassed those January highs in August. And the big caps did it in September. And then we had a heck of a fourth quarter where, sort of tighter policy from the Fed started to pull markets down. And companies came out and said, hey, remember how you guys all thought that the trade war wasn't going to hurt the U.S. economy? Well, guess what? Think again. And the narrative changed. Stocks were vulnerable from a valuation and positioning perspective, and we tumbled. And as I look at things today, valuations, one of my models is back to tech bubble highs. When I look at NASDAQ positioning and the CFTC data, U.S. equity futures positioning among asset managers, a good proxy for institutional investors, that actually recently returned to the 2015 highs and is starting to come down. And as I look through a lot of these indicators that I track, earnings sentiment, U.S. positive economic surprises, the peaks are starting to pile up. We may not have hit them just yet, but they're starting to be within reach if they haven't been hit already. And so I look at where the valuations are at tech bubble highs. Do I want to chase this? No. And if I'm being intellectually honest, I'm not going to tell you to chase it here.
But, you may have heard the earlier conversation we had, Lori, about Apple, and Tim and I sort of quipped back and forth that nothing mattered with Apple, right? The fact that China, that half the population makes less than the cost of an iPhone, it doesn't matter. Extrapolate that out to the macro market. It hasn't seemed that anything has mattered. Why not?
I think the market at the moment is riding high on these hopes around vaccines. And I think what we heard from the Fed minutes today, is just kind of a sobering reminder that this economy probably has a long recovery path in front of it, but the market hasn't been thinking about that yet. And I think when we come to tech, it's just really a tug of war with these tech names between extreme valuations and positioning that needs to unwind, and strong fundamentals that make those things deserved. Now, what we do know is that the institutional investors are starting to retreat in terms of the futures exposure to the NASDAQ trade. We haven't seen that, or at least we hadn't as of mid-August among the Robinhood investors. They were still pursuing that trade, but the institutions are starting to get nervous. And we have seen, tech sort of wobble as the new case count in the virus has started to come down. So, I'm neutral this trade, but it's interesting. You are starting to see some wobbles, and that positioning is really starting to worry people who have made a lot of money in this space.
Lori Calvasina, RBC Capital Markets. Lori, always a pleasure to get your take as well. Lori, thank you very much, and we'll talk to you soon.